Hello and welcome. My name is Steve Pugh, and what I try to do this week and every week is have basically it's a podcast where I talk to interesting people about their business or career, and we go through loads of really interesting stuff about strategy. And what we try and do is talk about topics which hopefully are of interest to you and the audience, both in terms of things which are just generally just interesting, really good people who are here to kind of share their backstory, what they're about, all of that kind of stuff. And the chap who I'm going to introduce you to today, and again, we'll go through his kind of story and stuff. I've probably known for about 10 years and certainly kind of a rising star in the industry, but I won't kind of ruin the whole interview. But if you stick with us for maybe 30, 40 minutes, hopefully you'll, glean some really interesting stuff that might be of interest. Aaron gets to share his story. And yeah, hopefully you'll join us for the next kind of half an hour or so. So there we go. So, Aaron, would you like to say hi to everyone?
Hello.
So when I kind of first started these, I always wanted to almost speak to people that I kind of know, from around the scene and just different sectors and stuff, because I think that adds a level of kind of, it's more genuine when you talk about different topics, where actually the backstory and the people and you can trust them and that kind of thing. And yeah, we've probably known each other for about 10 years, I'd say.
Yeah, it is now, easily.
Because
scary how quick that has gone, though.
No, tell me about it. Because it was when I was at the Tees Valley LEP, and we were creating what is now called the Tees Valley Catalyst Fund. And at the time, it was just a really early idea. And basically, I remember reaching out to you, and I think it was Brian Foreman, was it?
Yeah, it was, yeah. You guys had an idea for a new product, and we were trying to do some things in the market, and kind of two things came together, but it was very novel what you were trying to do at the time.
Yeah, cool. But we'll touch on that later on. But I'm saying, we've known each other for quite a long time, and I've since seen you kind of win various awards and stuff, which we'll touch on as well. And by the sounds of it, it looks like you also, when we spoke today, you've had a chance to have a haircut, which is always good as well.
I wish that was true, Steve. My one regret for doing this call with you is that I haven't been able to have a haircut. So you're looking particularly sharp, but I can't say the same for myself.
I wouldn't say that. So as we kind of, before we go into the interview, one of the things I always kind of like to start with is that if you're happy to almost share a bit of your story, where you grew up and almost how you got to where you are, when these kind of go onto YouTube and different things, the hope is it kind of inspires people to think, well, actually, I like the sound of what you do. I could do that. And then likewise, it being relatable that I don't know where you're from. I'm sure you can hopefully kind of tell me, but it's almost where people from that town or that area can kind of, they've got someone to relate to. And, again, talking to real people with real interests and that kind of thing. So like whereabouts did you grow up?
So I was born in South Shields in the northeast of England. And I grew up in a small kind of town called Bolden on the outskirts of Newcastle and Sunderland.
I know Bolden.
Technically a sand dancer, as in born in South Shields, but living between Newcastle and Sunderland, so always been interested in growing up with friends in terms of people supporting different clubs. But yeah, Bolden.
No, fair enough. And then, I'm trying to think where to start. So what were you like at school? Because again, I'm always interested in this, just because to do your job, you have to be quite entrepreneurial. You have to figure out ways to do things and that kind of thing. And actually, a lot of the entrepreneurs and stuff that I actually speak to, a few of which were a bit cheeky at school, if that makes sense. And I'm always just interested in people's characters, because it's when you kind of go through the story, one of the great things about social media and branding, and as you get to know more people, the more you get to know about someone's backstory and where they went to school and what they were like and stuff, it just builds more credibility that anyone that watches this, it develops a better relationship with them.
Yeah, so I went to state school in Bolden. I grew up with a group of kind of 10, 12 real close friends all through that time period. In school, what was I like? I was one of the kids that really loved going to school, but also I was kind of in with some of the cooler people. I wouldn't say I was one of them, but I was friends with them. So I was definitely a social butterfly in terms of knowing lots of people in school and being quite outgoing, which is necessary for the types of job and the career I've done. It's a people-based job, and in school, generally pretty good at most topics. Foreign languages a little bit more challenging. For some reason, they just didn't stick. But the sciences, mathematics, IT, but business studies was the one that just seemed to come so naturally, and I had a real fascination and always have in terms of entrepreneurship and business. And that carried right through from that kind of secondary school first taste of business education right through to head on to college and university.
Michael Griggs sends his regards. Starting to get comments through. And again, if you've got any comments that you want me to ask Aaron, drop them in and I'll see what I can do.
Was that Michael Grayson?
Michael Griggs.
All right, Michael Griggs. Yes, hello, Michael. One of my former Barclays colleagues. Top guy.
It's the wonders of doing this live is people can actually ask you stuff, and when it goes horribly wrong, they can see it. So anyway.
Yeah, he's watching me live now.
So how did you, I guess, did you go to uni? I'm trying to think, how did you kind of get through to start into finance?
Yeah, so I went to college to do A-levels and did business law, information technology, and marketing, and then went to university. Slightly different university journey to most, not in that I stayed local in terms of at Newcastle Business School, but more that I actually worked full time through my entire university degree, and around lectures and around seminars, because I was lucky enough to walk into a job at 16 at HMRC, or
Wow.
Inland Revenue, it was known at the time. And I got into quite a good role, which was quite well paid. So I stuck at it and did university around that. And that's been a big kind of formation point for my career in terms of everything I picked up there.
Oh, cool. See, I didn't know that. And it's this kind of things that when you get the chance to kind of talk to someone and have a bit more time on, you obviously we take, say, half an hour over it, you can learn stuff that you just didn't know. Because actually it's one of those things that the easy option would almost to have been the full-time student, do what everyone else does, kind of piss about a bit and just have fun. So actually, it takes real discipline and kind of, to work your way through, especially whilst studying.
Yeah, believe me, it took some discipline when everyone was heading out and I had to drive through to work to do the 5 to 9 p.m. shift or something. Didn't stop me going out afterwards, but I wasn't much use in work the next day. It took some discipline, but it was worth it for the no student debt that I managed to get out of university with, and I could buy myself nice things while I was in university. So it was very fruitful, but more so where it really came into its own is because I was working with more senior people from quite a young age and line managing staff from quite a young age. It stood me apart when I then went on to do graduate recruitment roles and applying for graduate schemes or in later stages of life, because I'd already had experience of how to conduct myself in the workplace and how to work with people. And I do think that's really crucial. It's some kind of quite basic skills, but if you can get them in early, it stands you in good stead for the future, learning how to work as part of a team, dealing with people, etc.
Yeah, that's awesome. So obviously we'll move through to the point where kind of where you are now. But can you give a quick summary on your career history? How did you get started? What was the first job, and almost the journey through to where you are now?
Yeah, so my first job was picked up walking down Northumberland Street in Newcastle shopping. Not long after I'd turned 16, and a lady approached me and said, "Would you like a job?" And naturally I said, "Well, maybe. What is it?" It's a bit odd to be approached on the street. And at the time, Inland Revenue were hiring a load of people in Newcastle to support the launch of child tax credits, working tax credits, when that first happened. So in the clothes I was wearing, I walked in with no CV, no records of achievement or anything into this hotel and interviewed. And they actually offered me the kind of better of the two jobs that they were recruiting for that day.
Wow.
Initially to start working weekends. And it was processing claims for this particular benefit stream.
And you were 16?
Yeah, it was literally as soon as I was legal to work. I have not worked. I've been in a job basically since the legal age to work the entire time. What was brilliant was I've always been a bit of a gadget guy, a tech guy. We started doing the job and I looked at the job and thought, what am I sitting typing letters for? And I built a little computer program to do the letters for me. So I walked into the office and I set that away, and I would do 200 letters in a day, and everyone else was doing 20 or 30. And at first, I think someone thought I was doing some kind of fraud. But then they soon realized, we're onto something here. We don't need as many people if we can do some of this. And I quickly got promoted at Inland Revenue, which is why I stuck at it while I went through college and university, because I quickly got into a role which was a kind of performance management statistics role, where I was looking at the work that teams did nationally on this particular activity and trying to optimize, create efficiencies in the processes, either with technology or with the way that we allocated the work and the way we did things. And that meant I was working with people who were managing 200, 300 staff. I had a small team of my own at 80, and I was line managing 30, 50-year-olds. It was scary stuff at the time because I hadn't experienced a lot of life myself, but it helped getting me on the journey in terms of work.
But things, what I love about that is that when we're saying about the entrepreneurial traits, there's always breadcrumbs that you see throughout someone's career where they've just figuring out how to do that. Because again, if that was a business, you would charge the people per letter you send, and you just figured out a better way to do it. And no, it's awesome. And then what happened next?
Going to university during that time period, and I always had an ambition for better or for worse to be an entrepreneur or a banker. You can read into that what you wish. But as I was graduating, before I could go and apply for graduate programs, I'd won a couple of awards when I was part of Inland Revenue, and I got approached internally from another department of government, the Foreign Office, and they asked me, before you go into the world that you'd like to go into, would you like to come and kind of work for us and see if this would work for you? So I did go down and move down to London and spent kind of just under a year working out of the Foreign Office for them to see if that was a career path for me. And that was fascinating stuff, most of which I can't talk about. But it was great experience, some kind of lifelong memories being down there. But I still had this yearning to go into finance or do something for myself. And I did see finance as a step to doing something for myself. And I guess the basic arbitrary strategy around that was, could I go and see how it's done from the other side, how you run a business efficiently, meet the people that help you run and set up a business, see how people achieve sales, see how people grow, see how people shrink. And then when I go and do it, I'm taking less risk. I've learned something before I do it. And that may still happen. You never know in the future, but it's certainly been the kind of spirit of how I've done things. So spent that time there, decided it wasn't for me, and wanted to try banking. So I applied for a load of graduate banking roles. I was offered a role with Barclays in London, to stay in London, but then RBS came along, and this was pre-financial crash. So quite a lucrative brand to work for, fast-growing business. And they actually said to me, we can't find anybody in Newcastle. Do you want to come home? And that's how I came back to the Northeast at that point and joined.
I ask you a quick question. Because we'll touch on later, obviously it's the whole premise of the interview, but how does the Northeast financial scene differ to London? Because obviously you would have seen both. Is it as fast paced, or just how are they different?
Well, certainly, there is no investment banking scene in the northeast of England to speak of. But otherwise, it's really, I'd argue, the biggest difference is in the northeast and in the regions of the UK. Everyone tends to favour doing business with people. In London, what I wouldn't be as keen on is, I do think finance in general is more of a commodity. Because there are so many providers, and it's seen as far more of a commodity, whereas people like to do business with people and deals with people. And that's the way I like to do things. I'm that kind of people relationship person versus wanting to play some kind of commodity game. So the Northeast was...
What's interesting about that, though, is almost the fact that what you're then doing is that if you're good and you can develop good relationships with people and build trust, you're going to be able to be more successful over time because of that, as where if it was just commodity finance based, someone else offers a lower percentage or whatever, they'll win the business. That's not actually a great environment to be in. So almost from a business strategy perspective, you want somewhere where good hard work is recognized. So by the sounds of it, it's a lot better to do business in finance in the Northeast than it is elsewhere.
Yeah, well, there's a smaller professional community, so you can really get to know people. And, I've got friends now who were built through initial business contacts who, I'll socialize with, and they came to my wedding, I've holidayed with. It really is that type of an environment where you can build up a collection of people you really work with and you trust each other.
Yeah, cool. So would you like to tell people what you're doing now?
Yeah, so, after 9 years in banking, I still had this entrepreneurial spirit, I guess. And the last role I did before my current role was working with more mature, more sizable companies across technology and other sectors. And through that, I got to meet a lot of venture capital, private equity people, and all of a sudden started to learn about the industry and what they did and how they did their jobs. And if I take you back to kind of my strategy, which was to try and do something in finance so that I could de-risk or learn about going to do something for myself, private equity venture capital was the natural next step, in that they get far more involved with the actual running of the company. You own a stake in the business and you're trying to support management to grow, and you typically take a board seat. So all of a sudden I'm in this perfect hybrid world where I'm actually directly involved in helping run and grow the companies. And I have an equity position in each of the companies that I get involved with. So a spread, instead of one asset that I've went and founded for myself, I've got a spread of companies that I can try and influence and grow.
That's very cool. I must have, when we met up for breakfast at Carlicio's, when it was still there, since RIP gone under, it was fascinating when you were talking about how actually you have to put your own, I was going to say cock on the block, but you have to put your own equity stake and your own effort in. So actually you've got a stake in the game, you've got skin to lose. And I was fascinated by that because I never thought that would be the case.
Yeah, so every deal, the whole investment team has to put a bit of skin in the game alongside our clients whose money we are investing. And it's meant to create alignment, in that we're trying to drive the same behavior as the management team and as our funds in growing shareholder value, so that everybody involved gets the benefit. And it generally does drive that behavior in good and bad times, either trying to rescue shareholder value or trying to grow it.
So would you like to tell people about Mercia, just in generally what it is, what they do?
Yeah, so a brief introduction to Mercia. Mercia is an asset management business with circa 800 million under management.
Wow.
And that's across lots of different funds, from debt, equity, and private equity funds. And Mercia writes checks of 250,000 to 10 million for a first investment. So it's a real broad range. And Mercia calls it a complete capital model, in that we hope to be able to service and support businesses from their earliest stages to much more mature stages. And we think that's a differentiator, acting across the regions with that kind of depth of capital. I specifically work on our scale-up fund, as I describe it, or our venture capital trust, which is a venture capital fund aiming to invest 2 to 10 million in fast growth technology, life sciences, engineering, specialist manufacturing, all manner of sectors, but ambitious management teams that really want to grow the businesses.
Oh, cool. So it was just this morning, I won't say who it was, but I was talking to someone on the phone, and they have a business which is to make physical products in the kind of engineering type space. But actually, I think it'd be an interesting topic, if you're happy to give us a few minutes on it, is that almost you're an entrepreneur, you're an inventor, you've got a team, you've got a product that you want to develop. What is the process of raising finance and getting people involved? And likewise, what is it that you actually look for in terms of, in companies to invest in?
Yeah, fine. So I guess what's the process? This can be done lots of ways. You can approach people like me directly, and you can tell me about your business and what your plans are. And you can see if the stars align, which is probably the most basic variant of what we're talking about. But typically what people will do and founders will do, and what I'd encourage if you're thinking about this route for your business, is just sit and think, what could you do with more capital in your business? Be it accelerating sales, be it creating a new product, be it some other thing that would drive more shareholder value for you and the partner that you bring in. And once you've kind of formed some basic strands of that, then build a real plan about how you go and execute that, and how much capital you need. And that's the best way to have a really constructive conversation with someone like me and the rest of the industry, because you can present to them effectively your business plan for how you create value together in exchange for the capital that I bring and invest in the business. And private equity venture capital can fund lots of things, from kind of growth, new product development, change in ownership, a buy and build, acquiring other businesses, or some other strategic event. Is so broad, and there's lots of different participants who do slightly different things. So the best place to start is just, what do you want to do? And then the industry and the accountants and the advisors who are out there can help you pull some of that together, but also speak to the right equity house that's a good fit for your plan.
No, cool. It makes sense. Again, like so with the guy I was talking to this morning, They have, he's worked in a sector that he knows very well. They want to go out on their own, launch their own product. But I guess it's difficult that when all you have is the concept, the idea, maybe the design, but you don't have proof of revenue, proof of sales, etc. I guess in that case, I guess there's still potential if you like the team and you like the idea, you might still invest, but probably not at the same size of stake, that kind of thing.
Yeah, so some of Mercia's funds that are under management will look at investing in a proof of concept. And the idea is there's an investment amount that helps them validate something in that example. So it might be that they build the first production line and they build the first few products and they get a few customers to give them a go. And then what that would then trigger is another round of financing, perhaps from me, perhaps from another one of the earlier stage funds, to then take that to the next level beyond that. And it tends to be quite iterative like that, in that you prove those milestones, those hurdles, to access more funding and greater levels of funding if the business does need it. Mm-hmm. So that tends to be the approach. And it's about finding that best fit for your plan. So if management teams want to do something like that, pull that together, work with the likes of yourself, work with the accountants and the advisors to figure out, well, actually, which investors should I be speaking to go and do this? And there is a fit thing there with what your plan is, because investors do have criteria and it's all very different.
And then do you look at like a 3-5 year like investment horizon to then exit at certain point? Do you kind of, lay your cards out at the start?
I'd say that was typical in the industry, that type of time frame, but we're quite lucky in that our fund is a venture capital trust and it's evergreen. So we can actually be as patient as an investor as we need to be, for better or for worse, as a phrase I like to say on that. But we can wait to make the best return for our clients and for the other shareholders that are in the assets we invest in. So we're quite lucky in that regard. But average hold periods in venture capital are probably 7 to 10 years.
Okay. In
private equity, and I can give the distinction between the two sets of terminology. Their hold period is probably more that 3 to 5 year window.
Yeah. I was fascinated last time we spoke. It was almost and if you're happy to talk about it, it's the concept that if you're going to back 10 companies, how many you actually think will succeed, how many will fail. And actually it's the risk management, but it's how the whole industry seems to run. Are you happy to kind of talk about that kind of thing?
Yeah, well, there's some great content on YouTube that's definitely better than me on that topic. But actually, look, that does change based on what the fund does. So in venture capital, you do assume a higher loss ratio, i.e. a greater percentage of your portfolio will be an unsuccessful investment. And I guess the bet is that there are some that you make a small turn on your money, i.e. your money back and some. And then there are a very small number, but a number that do very, very well and make a number of times return on the money you initially invest. And that covers the losses and the subpar returns on the others. And if you get very, very lucky in venture, you get one that returns the entire fund, as many US VCs have had with the big Facebooks and Teslas, which that one pays for their entire fund and allows them to kind of keep going and find more of these things. In private equity, the kind of ratios that you assume are far different because you're investing in more mature businesses and you're writing bigger checks. You have less room for losing money. So you want more of those assets to work and you have a different investment approach.
No, it's fascinating. It's fascinating. I love to hear about this, and I think a lot of people do. And it's often when people think about this kind of thing, they either think Wolf of Wall Street or they think Dragon's Den. And it's that kind of thing, just to also, put a face to the name, to talk about how, different types of things can work and things to consider. And then I really appreciate your time. So do you mind if we touch on almost like the Northeast investment community? Because you kind of mentioned it yourself. And before Christmas, I had Carl Swansbury, and it's almost, there seems to be this really good thriving community. And you see in Northeast Times and all the kind of journal and stuff, the investments that seem to go on. And it's just, how do you, what do you think of the investment community in the region? It seems quite buoyant at the moment.
Yeah, well, nationally, equity investment is, as it is internationally, having it's having its moment because as economies continue to appear to shift to service and technology-based businesses, all of a sudden that's more of a play for equity than it is for debt. but also because lots of the world is heavily indebted, there is a kind of a greater play for equity, or a part to play for equity. And then there's loads of return dynamics as to why more capital has been started to be channeled into private unquoted companies, because of challenges with returns in quoted companies and valuations. Mm-hmm. So that's probably the macro level things, that what that's driven in the region and in the other regions of the UK is an increasing number of investors across all areas of investment, from angel and pre-seed to scale up investors, to private equity investors. And the Northeast alone, as an isolation or as kind of a satellite, all of a sudden has a really kind of buoyant investment community with at least 6 investment managers who have offices in Newcastle. I mean, that's unbelievable versus kind of 5-10 years ago when maybe there was one. Some of that's driven by European investment or government intervention in terms of earlier stage funds. Mm-hmm. Some of it's real private equity houses that write big checks, deciding that there is opportunity in the Northeast and opening offices and hiring people.
I was like, so one of the things that I've seen is, obviously we've got COVID at the moment, hence why we're doing this remotely. But actually, I think there was a big, when this hit almost a year ago, there was a big period where I was like, oh shit, what's going to happen next? What do we do? How is it going to impact? But actually, I've kind of seen it. A lot of the clients I work with have just been kind of cracking on to just keep operating, keep, where they can. And most of them are kind of, say, 1 to 7 million turnover kind of range. So it's a decent sized business. None of them, fortunately for me, in hospitality, because again, that's a different kind of ballpark. But actually, it's almost with COVID, and I was with an entrepreneur yesterday, and we were talking about how they've got a great business also on Team Valley, where I am at the moment. But it's looking at how COVID has forced them to live stream and scale, build the steps, the building blocks to scale in a way that would have never happened if we hadn't had COVID. It's almost when you have market shocks, I almost think that real entrepreneurs that will innovate and learn, it's the perfect time to actually make a jump, maybe take investment to take that advantage over other people whilst everyone else is still on the heels.
Totally agree. That's definitely what we're seeing. The ambitious management teams, which is what we're looking for, are coming to us now and thinking this is a once in a lifetime opportunity, while only competitors flounder to buy them, to take them out of the market from a competitive standpoint, to innovate with a new product. Mm-hmm. But also then there's a whole host of other new first-time entrepreneurs who are seeing disruption opportunity, and that there's lots of businesses resting on the laurels or not doing things with a great level of service, or mm-hmm. not serving a fantastic product, and they're bringing new solutions to the market. And the receptiveness to equity in those people who are new to entrepreneurship is far higher, because it's kind of much more commonplace now, and it's much more in the public domain in terms of all the well-known brands that have followed that journey and become mega businesses.
But I think that's almost part of I used to find this at the LEP. And again, when we set up the Catalyst Fund, which I still class you as a major part of, even though we ended up going with FW Capital, but it was almost I loved bouncing the ideas around with you. But one of the things I'm always conscious of, and I was at the time, was that you can have the best business support mechanism in the world, but if people don't know about it and they don't understand it, they can't buy it. And it's almost, part of the reason why I like doing this is that there might be entrepreneurs out there who've literally started up in the past year. They're starting to gain traction, and they might not know who to reach out to, what they do, how it works. And something like this can just spark an idea to just start those cogs in motion for kind of, moving forward. So can I ask, what do you normally look for in an investment?
Yeah, of course. I think this is pretty commonplace, but the first and foremost, management. And it's, ideally there's breadth and depth in management. What I mean by that is there are kind of a number of members of management who make up a really good complete team, rather than kind of heavily focused on one individual. But often in early stage companies, the goal, the task that I'm set is to build that team out around maybe 1 or 2 founders. Mm-hmm. So it's key to finding these high quality, capable, hungry entrepreneurs. And I describe an investment relationship as like a marriage, and a bit extreme, but ultimately, you are becoming partners for the life of that business, or at least for the life of that investor's investment. And the way that investors work and the terms and conditions, I guess, they come with mean that you have to work together. It's not just take some money and off you go, or it really is that. It's a real partnership, so you've got to get into the relationship with the right people. So you've got to be able to work with them and so if people are talking to private equity venture capital, encourage them to meet a few houses and find that fit. You'll keep hearing me say the words fit. It's really true, particularly with management. And then outside of that, it's the usual other things. So great market, great industry or sector where we think there's going to be some good, strong growth, and where the product or service or innovation that the company has come up with can carve out a real strong dominant position. Even better if that product or service is defensible or has IP or patents around it, but not essential. Sometimes it's just really good execution and first to market, and sometimes that is what can be the real engine for growth. And I guess on that kind of analogy of an engine, what my favorite thing to say to potential investee companies is kind of prove to me your sales engine, or the engine of the business, i.e. if we put inputs in, cash, marketing leads, or whatever it is, what do you do? How do you do it that generates X for a return? And if I can start to build an investment case around, okay, if I continue to do X, then this machine might turn it into Y. And if we get smart with the machine and find a few optimizations, then perhaps we turn it into something even better than that. And then the final thing is just a good deal. And that sounds really basic, but because it's this partnership and because there's risk involved for both parties, we need to feel, and the entrepreneur needs to feel like it's a fair deal from a valuation perspective, and from what that investment looks like if everyone goes and delivers the plan and works together. And that's the final piece of the kind of recipe. There's a lot of things that hang underneath that make it think something look like a good business, but they're the key things.
So I completely agree. I'm negotiating a deal with basically two companies. One's in the Far East, one's a massive corporation. And I'm just trying to see how we could kind of work together. But what's interesting is that I always try and put myself in both parties' shoes, because I'm independent, so I can kind of do that. Because if the deal falls down on anything for either party, you're dead in the water. So it's almost saying, although one party might want this, if they're never going to accept it, you're just constantly trying to iterate and find. And I think it is about just building trust with people that if things go wrong, which they inherently do, actually do you believe in their vision, the values? Are they honest? That kind of thing. So no, I appreciate that. So cool. I'm just going through my questions. I was going to say, actually, what advice would you give investors looking to kind of reach out? But I think we've kind of covered that. Because again, it's about having the business case, really getting your strategy in place, and then I guess reaching out and then just having conversations and getting to know people, recommendations, case studies, that kind of thing.
Yeah, I guess the only thing I'd add from what I've said already earlier is on that engine point, there's a lot of data in everybody's business. No matter what you do, you don't have to be a technology business to have a lot of data within your business to prove if you put an input in, you get an output. And there's value in that data, even if it's just in demonstrating to someone like me that what that input and engine can kind of create. And I think a lot of people underestimate that, and so that's one of the key things I work with as soon as I've done any investment, is trying to get with the portfolio company under the skin of how do we demonstrate that? How do we prove to someone if we come to sell this business in the future? You're almost preparing the business for sale the moment you've invested. In that you're looking to build a data bank, which you can say to somebody, you can't argue with this, guys. This business is going to go and do this. That's the ideal. You don't always get there. But for entrepreneurs, build that data bank of what makes my business good and prove it with intelligence and data. And even if you don't get private equity, you should get good value if you come to sell your business or if you need to raise some kind of capital for something else.
I've got a question for you. So you're building your business. And again, we covered this when I spoke to Carl, but you get all your marketing in place, you reduce your cash, you do everything right that ticks all the boxes. Do you feel you still need to leave room for the new investor to take it further? Or would you recommend that the person just maximize everything they possibly got, but then it's all about selling the dream to the next level? There's a fine balance between maximizing everything you humanly can now, but the worry is that if you make the business reach its full potential before you sell it, there's nowhere for the new investor to take it, if that makes sense.
Yeah, well, you're on. I mean, I would discourage anyone from taking to an investor, or even in a trade sale process, a message of there's no way this business can go beyond where it is now. I mean, definitely before you do something, you have to find out what that is. What is that potential future engine for growth? How does the latest person to carry the book in terms of owning the company or investing in the company. How do they make some money? That's ultimately what you are, in my opinion, selling to the next party that comes along. So that's, if you build those data points that I've talked about around what could be those things, and they don't have to be nailed on, but there has to be some visibility of growth for whoever comes next, be it investor or be it a new owner. So you've got to work to build that business case.
Oh, cool. Awesome. I'm very conscious of your time. And I know before we came on the call, you said about how busy you are. At the end of every interview, or near the end of every interview, I was asked kind of 2 questions. The first of which I think is really valuable, and I'll recap this in about 6 months' time, because actually going back through and listening back to people that I've spoke to before, everyone always has this really great advice that actually seems to be applicable all the time. We all go through different challenges with COVID and lockdown and finance and stuff. But would you be happy to share what's the best piece of advice you've ever had?
Yeah, and you'll think this is typical of me, Steve, because I'm going to say 2 bits. But the first one is a bit of an old-fashioned one, but be the radiator, not the sink. And it's really just about self-awareness, and you learn it over time. But someone once said to me, in all interactions, particularly in front of your peers and your team, always try and be conscious that you're the radiator, i.e. the one who radiates energy or enthusiasm or positivity, versus being the negative one or the sink, because the sink can pull down the whole team. A radiator can light up and radiate into others. And that's really stuck with me, even if it's quite a tough message, to try and kind of deliver it, at least in that way. And I guess the second bit that I'll kind of slide in there is one that I like as well, which is always be a chameleon. And that's not a disingenuous thing. What I mean by that is react and respond to the environment you're in, the people that you're in front of and you're working with, and be responsive to that. And that's just an awareness thing in terms of reading the room and reading emotion. And I think those 2 things, if you're in a people industry like I am, are the kind of key bits of advice that always come back in my mind. If I hear myself doing something or saying something, I hear that voice in my head saying one of those 2 things.
Like, out of interest, do you ever build into your PR strategy about how you as a brand or personally communicate those values?
I probably just try to live by them and demonstrate them. But it's probably the way I do that. I don't kind of as proactively, consciously do it, but sometimes I do find myself thinking, I'm moving into drain mode here, back up, think of a different way to deliver this message. So it's just about being aware and being able to step back to that helicopter view. That's something I've learned with experience. Instead of being in the weeds all the time, sometimes just take that slight step back if there's a problem and look at the bigger picture, and then try and go back to the weeds. And the weeds make much more sense when you can take that step back.
No, I think it's awesome. And then the next question, similar, but it is kind of different. If you were to give advice to your younger self, and actually I love the story about almost working from 16 and grafting and working through uni and stuff. I love that. But yeah, if you were to give advice to your younger self, what would it be?
Well, the first one's a geeky finance one. I would have told myself what compound interest was and forced myself to save more money instead of spending it when I was younger. So you learn that one with time. And then the other one is just that perspective. So to the kind of lessons that I've learned, just actually sometimes when you're in the moment on something, especially when I was younger, because that's I think what you like when you're younger, just stop, take a step back a little bit, look at what the bigger picture is, look at what else is going on, and that perspective will see you through whatever that challenge is. I think I would have probably had a word in my ear about those 2 things, and I probably have a bit more money in my pocket and a few less challenges over the years.
But it's funny though, isn't it? Because it's almost when you have times of challenge, and it's the things that, none of us are perfect, but that's what you learn from, and that almost makes you who you are today. That actually, it just is what it is. That's why it's called experience. Nobody was born kind of perfect. So that's cool. Is there anything you would like to talk about or plug before you go?
No, I've plugged Mercia already. So I think the last thing I would say is if people are thinking about equity investment or growth capital, look at the BVCA website, a guide to private equity, which Steve, you can put a link. I can send you the document. It's a really good industry, totally independent from each of the firms. It represents all of the firms in the private equity industry. If you want to learn about private equity venture capital and what it could do for your business, I'd encourage people to read that. And the more we educate people, the more opportunities there'll be for me in the future. So that's my only plug.
No, sounds awesome. But I've genuinely enjoyed catching up. I know last time it was more fun because we had a few coffees and we had breakfast. And it was a nice environment. I'm still shocked about how long in terms of time it's been. We're almost at a year of being locked down. But again, hopefully when Boris lets us out to play again and the snow's gone and whatever, it'd be great to kind of do more networking events and just kind of catch up in person.
Yeah, I look forward to it. My type of thing.
Cool. Well, I appreciate your time. Hopefully people will send in comments, and just so you know, I clipped this all up. It'll go on YouTube. I'll pick like a 10-minute section, put it onto LinkedIn again tomorrow. And then I'm sure you'll get a few comments. And then likewise, anyone that might be interested to find out more, please reach out to Aaron. He's a really good guy. I've known him for a long time. And yeah, I think we'll call it quits. So no, Aaron, thanks for your time. And I'm sure I'll speak to you soon.
Thank you.
All right. Cheers, mate. Bye-bye. Bye-bye.